Hello, everyone. Travis Schwab here from Eventus Systems, CEO of Eventus. Eventus does trade surveillance, risk management, and the capital markets firms. We're joined by Michelle Bond here today. Hello, Michelle. Happy to see you. We're talking about surveillance in the digital asset space. And so super excited to have Michelle here to discuss. We have tons to talk about. We're probably not going to get to everything, but that's okay. We're recording the session just to let you know. We'll give you contact information at the end of it to reach out in case you're interested in learning more, listening to it again because you loved us so much. If you want to ask questions, please do. There's a Q&A button on your Zoom link there. Please ask questions. I will get to as many as we can. Michelle and I are calling this kind of a water cooler chat, you know, hearkening back to the halcyon days when people could actually be in the same room together. So not a pretentious fireside, but really just this kind of really active conversation about trade surveillance in the digital asset space and the digital asset space in general. So with all that in mind, let's have Michelle please introduce yourself and talk a little bit about Adam, please.
Thank you so much, Travis, for having me here. And I also just wanted to say thank you to your amazing team for all of their help in planning this event.
Appreciate that.
So yeah, thank you, Diane, Eric, you guys are awesome. So just to give you a little bit of background, so I am the new CEO of Adam. I spent my entire career working on financial services issues, and that's been in both the public and the private sector. I started my career at FINRA before going to large law firms, and then I served as counsel on the Senate Banking Committee, where I drafted legislation. I then went to the SEC, where I worked on rulemaking and cooperation among regulatory agencies as well. Then I went back into the private sector. I ran regulatory affairs at Bloomberg, and I worked on the implementation of these regulatory measures that I had worked on while I was in government, and also just helped to advance sound public policy from an industry standpoint. So recently joining Adam as CEO has been really exciting for me. Our mission is to foster fair and orderly digital asset markets where participants can transact with confidence. Adam is a private nonprofit membership-based association of firms in the digital asset industry. And we're working with leading financial firms, entrepreneurs, and regulators to develop the industry's best practices to facilitate safe, secure, and efficient digital asset markets. Our members include market participants, such as, I would say, trading platforms, custodians, investors, asset managers, traders, liquidity providers, and brokers that are all operating in this ecosystem. We have a great membership roster of some of the most well-respected firms in the industry. I'm proud and very thrilled to be working with them. That includes Anchorage, BitGo, Batuta, BlockFi, BTIG, CMT Digital, Cumberland, Galaxy, Genesis, GSR, HRT, Paratexas, Paxos, Symbiont, XBTO, Sarson Funds. So we have an incredible
who's who, Michelle.
I know, right? I have to rehearse saying that even faster.
I like it. It's like the 12 days of Christmas, maybe you could get like the 18 members of Adam in kind of the song.
Yes, absolutely. And look, as with most CEOs, I have goals of increasing our membership for the association and doing so in a strategic manner. I'm also excited to launch a series of brand new initiatives that will help best position our members to serve as trusted partners with policymakers, and also just help our members navigate this very rapidly changing and evolving regulatory landscape.
Wonderful. That's awesome. I appreciate that. And it's just a couple questions around that. So tell me how did you get into the blockchain space? Like what was your kind of thought process? You've been in traditional asset classes, and I think it's always interesting. You see lots of folks that have been in the capital market space and whatever avenues moving into digital asset space. What was the thing that kind of drove you or interested you in moving into this space?
I love working on policy. And so when I in my Hill days and working on Dodd-Frank legislation, I worked on the Jobs Act. I thought that was really incredibly exciting policy work. And certainly for someone with a legal regulatory background, like what I had. So after working on just sort of the legislative side of things, and then going to the SEC and working on the actual regs, I thought it was really interesting to sort of work on the implementation of Dodd-Frank in the private sector. And once I felt like that was on the whole pretty implemented, I was consulting with a bunch of friends of mine, and I was quickly realizing that fintech policy was like going to be the new sort of hot policy area. And honestly, if you look at the way digital assets and just sort of the regulatory landscape is evolving, it does show a lot of just sort of like the way that the traditional markets have evolved and developed, and how the regulatory landscape has developed there. And certainly, the regulators are viewing digital assets through the lens of what they know from, the equity market space and fixed income space, and just looking at, what they have in existence from a regulatory standpoint, and now trying to figure out how digital assets fit in. So I think having this background really tees me up well, and people like you, Travis, for working in the digital asset space. And it also enables us to work on just sort of, the cutting edge policy. So I think it's exciting. I think, coming to Adam in particular, I was really attracted to the code of conduct because I thought the code of conduct really, that's what sets forth the industry's standards and best practices. So I think that is, a principles-based way of governing the marketplace. And I think that's something that I think, the regulators, clearly appreciate. And, they've certainly been interested in engaging with us, just on the code of conduct.
Well, lovely segue. It's like you've done this before, Michelle. So let's talk about.
Never. It's my first water cooler chat.
Yeah, exactly. The first water cooler chat. So on that code of conduct. So it's Adam's been around for a couple of years, and maybe you could talk a little bit about, even you've been there fresh, right? You're there a month or two, but from a historical standpoint, really, what was the germination of Adam from all those excellent entities that you talked from, and then how did the code of conduct? I guess the code of conduct has been around for it came out last year. So maybe talk about the germination of the code of conduct and where it stands right now as far as how people are using it and looking at it today.
Yeah, so thank you. Because just to give you a little bit of history, a lot of people aren't, they're not aware of how Adam was formed. And I think it's really interesting. So Adam's founding members basically gathered together in 2018 and decided to form an organization that had the mission of creating a principles-based code of conduct that harkened back to the rules that existed and that the industry abided by in the traditional finance space. So certainly, for example, on FX and the FX code. And they had believed at the time, and it turned out that they were really correct on this, that adoption of digital assets would continue to grow, and that there should be some sort of industry-led framework that the market participants were using. So they got together and created this code of conduct. And they also felt that by giving institutional grade participants comfort as they were navigating this new territory, it was going to help and help grow the industry as a whole. So they created this roadmap. And so that kind of leads us to the actual code, and the actual code of conduct covers these rules for trading and custody and clearing, settlement. It encourages ethical conduct. It increases transparency to the public and for investors, and also helps governments as well. And as they're looking at this market from a governance standpoint, as they're evaluating compliance and risk management. And certainly, as I understand it, and just from talking with you, these are all things that Eventus is working on as well. And it seems that you have created the types of trade surveillance technology, also harkening back from traditional markets and being able to use that in order to now sort of put it into the digital asset marketplace. And I think this is, really groundbreaking stuff.
I appreciate you saying that. And when I've read through the code of conduct when it came out, and I like that analog of talking, pulling that FX code of conduct, and in general, let's call it, kind of a futures industry approach to prudential regulation. It seems like that's at least kind of the general spirit of that code. It's covering governance, compliance, the GRCs, market integrity, where you talk a little bit, the code talks about surveillance. And, we've seen countless examples, and, we'll talk a little bit more about ETFs further on in the conversation, but, for that growth of this industry, for that, the magical institutional adoption that, I think the industry is seeing and waiting on real adoption, you need basic infrastructure, basic kind of safeguards, basic transparency. And one of the ways you get that is to incorporate trade surveillance as part of that process. And so I think we're continue to be really excited about the kinds of exchanges that we're working with really around the globe, and the way that they're thinking about adopting these types of techs. And what's interesting for us is we've been in the digital asset space now about 3 years, and we really can pull in those great analogs from those other asset classes, and our backgrounds are the same way, right? We're all from kind of the traditional asset classes. And how do you get kind of that best approach when doing these types of activities for the organization? So I'm assuming that kind of informed the code of conduct. Do you think, as you've kind of learned about the code of conduct and the membership, I would imagine that being able to pull the best from all these asset classes was a real driver?
Absolutely. Yeah. And that's how we were able to come up with, we had some framework, a baseline framework to work with. So
Yeah.
we were able to say, well, this is how trading works in other markets. This is how things are, cleared and settled, and this is what regulators expect to see. And we were able to sort of just, drive that forward, and also at the same time while encouraging professionalism and, just ethical conduct by all market participants. So that's exactly sort of what the driving force was.
What is the pragmatic kind of approach? All right. So, and this is one of the challenges of code of conducts or not, right? How part of regulation is you want to do best because you think it's going to drive the pie to get bigger. Part of regulation is to root out bad activity. In a lot of ways, you have to do that as enforcement, right? People don't add costs, don't add annoyance to their business if they don't have to, unless they're forced to do that. So and we'll dig a little bit more on the SRO side of things, but in general, how does, at least within Adam, how is that enforcement or just the adoption of that code kind of enforced or talked about within your membership?
Yeah, so certainly all of our members as when they become members, they agree to abide by the code of conduct. And you'll see from the code that there are various areas where, they say they'll put policies and procedures in place on certain topics, and, do monitoring and those types of things. So this is what has worked in other market contexts, and this is what seems to be working here as well. So it's like I said, it's really groundbreaking to be able to come up with sort of the industry-led solution on this, and to be able to help, with like the regulators sort of do their function, help investor protection, and also to give sort of, these guiding principles to market participants. I think it's like a win. Honestly, I think it's a win for everyone. So
sure, no, that makes perfect sense. And so then, from also kind of I guess maybe an additional usage of that code of conduct is, I guess, that those talking points with the various regulators and government entities and all these other bodies trying to understand the space. Is that an accurate representation? Is like, here, this is kind of what we're thinking about this. Let's talk about how we can work together, on these types of issues. Is that an accurate statement?
absolutely. And I think it opens a lot of doors for us. I mean, look, regulators are looking to us as as being a standard setting body. I mean, I think that's amazing. I think I love that position, and because that's what we've done. And while we're also a standard setting body, we're also the leading industry voice for digital asset market integrity, because we have the code of conduct. And this was something that I think is, look, if institutional market participants are working in the markets, they're best positioned to know the ins and outs of the market. And I think it's a huge responsibility and a huge opportunity. And our members took that on and said, hey, let's do this, let's develop it. Let's codify an infrastructure that advances the long-term interest of the market. And I think policymakers really appreciate that perspective, because we're raising the bar. We're not trying to come up with a light touch or anything like that. We've raised the bar. Yeah. So it's a good spot for us.
Very nice. Okay, good. And so just as kind of a, in general, and I'm very curious about this myself, as it relates to Adam's engagement, and just understanding how to allocate your time, the organization's time. How do you pick what regulators to work with, and what entities to work with, and what papers and laws to focus on? It's overwhelming, and we've talked about this, is the amount of things happening within the digital currency space, the blockchain space. It's every day. There are tens, if not hundreds, of websites that you can look at. There's Wyoming's trying to do different things versus the OCC versus FATF versus IOSC. I mean, how do you, as an industry spokes group, try to kind of allocate your resources across all of these different fronts? It's overwhelming to me.
So this is why we exist, right? And this is what I've spent my entire career doing. So I've worked very closely just like on the international level with IOSCO, with FSB, with BIS. I've worked within the international community with all of the financial regulators and all of the major jurisdictions, that especially those that are looking at fintech. And before COVID, traveled to most of them. So certainly, I've been focused on sort of the international landscape. But from a US perspective, look, we don't have a consolidated we don't have a consolidated regulator. So what we do have is sort of the alphabet soup of regulators. And in a way, actually, I view it as a good thing, because we have a lot of, we have some of the best and brightest minds looking at this from a regulatory standpoint. And they all have sort of like differing areas of expertise. And, certainly we have, I would say in this space, we have the SEC and the CFTC, certainly the OCC. And I think, we'll talk about the incoming administration a little bit later, but I think we're going to see this space get attention from new regulators as well.
Right.
So we'll cover that, but certainly, you can't ignore any of them. And that's now on the federal level. And then of course, there's clearly a huge role for the states to play. I mean, look at what Superintendent Lacewell is doing at the New York DFS. And I mean, look at the Paxos PayPal deal, which was huge, and just some of the biggest news we've seen all year. And then look at all the framework that Wyoming has set forth, and they've been very active with no action letters and all sorts of different things. So I think, like it's a hot area, everyone's looking at it, and I think it's really important to represent the industry and to be helpful with and partner with the regulators, so we can share our expertise and make sure that the policy framework is informed and reflective of something that will work for everyone.
Yeah, I just again, you could go nuts looking at news, but Lacewell, Superintendent Lacewell got top, what is it, influential people of 2020 according to CoinDesk.
Yeah,
Yes.
I
Exactly.
just saw that. I was really excited.
Yeah.
I couldn't agree more with that. So I thought that was really cool news.
No, no. So let's talk about kind of actually outgoing regulators, and how it affects an ongoing, uh, really a very interesting ongoing soap operatic process of Bitcoin ETFs, right? So you've had this, I mean, is it at least 2 years, if not 3 years, that Bitcoin ETFs have been trying to get approved by the SEC. Clayton, outgoing you know, chairperson Clayton has said multiple times when they have said no, it's because of market manipulation, which obviously leads right into a conversation about surveillance. But and you have, just trying to set the stage here a little bit. In Germany, I think, right, you have the BTCE, which is a exchange traded note as well. You now have a backdoor way through, MicroStrategy, I think is the company. Yeah, MicroStrategy, who's trying to raise 400 million in convertible bonds that will invest directly into Bitcoin. Is the time all right? So Michelle, is the time right for a Bitcoin ETF, and how does that happen? What is the process? What are those kind of key steps that need to happen for that to be a reality?
So, Travis, yes, I think the time is right to approve a Bitcoin ETF. And I think one of the things, at least that the SEC has been looking for, is advances in the markets. And certainly things like Adam's code of conduct and having, principles to promote digital asset market integrity, coupled with the type of work that you're doing at Eventus, just to combat market manipulation. I think, in rejecting these things, like certainly the SEC has raised market manipulation concerns. And, I think especially also, knowing what works in traditional finance and in the regular, sort of ETF space, I think is helpful in coming at this, from a digital asset perspective. I also think we are going to continue seeing further infrastructure developments in this space. And, I don't think there's been a ton of talk about it, but look at what we see in the equity space. Like there's, things like market data and a consolidated tape, and
Go figure.
Yeah, go figure. Like I'd love to see a better SIP for digital assets, than the one that exists in traditional equities. And look, guess what? They have an NBBO and all of these types of things. So I think, we're going to continue to see market development in digital assets. And I think that's also one of the things, in addition to the code and surveillance tools, that will help give regulators some comfort in this space. I think industry, of course, is incredibly optimistic. I think it's definitely going to happen. Look at the SEC, look at the comment file on the SEC's website, in whether to approve the Bitcoin ETFs. Like, I mean, I would say the vast majority of commenters are voicing support for new products. And I think, if and when these will be launched, I think there's going to be a tremendous amount of early success with them. And look, I think, the cryptocurrency enthusiasts are going to be excited about them, as well as, traditional investors taking part in these types of things. And I think it will also further fuel Bitcoin's growth and adoption. One of the things I think everyone should look at is Crypto Mom, Commissioner Hester Peirce's dissenting statements on the Bitcoin ETFs. I mean, look, she actually raises concerns about interference with being able to continue to institutionalize the market, and thus causing delayed improvements in market structure and investor protections. And saying that this is what deprives investors, particularly I would say retail investors, of the ability to access the Bitcoin in markets within our regulatory framework. So she warns that any hesitancy in embracing new products and technologies is impeding innovation. And certainly she and all of our other regulators are cognizant of not wanting to drive entrepreneurs and and the opportunities that they're creating to other jurisdictions. So I think Bitcoin ETF is, I think, a really good example of this.
Well, and the market finds a way. I mean,
Yeah,
you can't just
right.
kind of do
Yeah, right.
whatever. The market finds a way, and what MicroStrategy is doing is a clear example of that. Okay, so if we can't do it regulated wise, I'm going to create another vehicle to do it on. It's just, it's counterintuitive that you know there's nothing to see over here, so we're not going to approve it. But by not approving it, you're causing the market to respond in a way that's not the most productive and optimal.
So true. And I think what Michael Saylor is doing is amazing, and he's also brilliant. So I think we're
also made the list, Michelle.
And made the list.
And made the
Yes,
list.
I
feel like we need
should cover the whole list.
Yeah, exactly.
Let's go through it, Travis.
Yeah, that's exactly right. Made the list. So I think, keep going. Sorry, I interrupted
you. No, not at all. No, I do think the market figures out workarounds. Look, I also think, I think the other thing, for example, Chair Clayton has said is, well, why don't we come up with, maybe there's like a middle ground to approve, these types, like maybe we can have securities token ETFs like first, and then we'll go into, so that could be a stepping stone as well. So, he's had some public statements to that effect. So, there are, I think, variety of ways to attack this.
Yeah, we're trying to come up with our approach on addressing the regulators at this point, because because of the now size of our exchange business in this space, it's material. It is now to where we can go to the regulators and say, by the way, you have a material portion of the exchange traded business that's being surveilled. These are the activities that are happening. These are all the steps that are being taken. It's time to maybe look at, and I know our clients are going directly, but we can go kind of representing, they don't know, kind of the sheer size of our client base, to where there's real action being taken by the institutions, the exchanges that want to attract a wider audience, that want to, address those safety concerns. And we were kind of not reluctant, but we wanted to wait until we had a critical mass. And we're kind of at that point to where I think, along with what Adam is doing, where we can go in and kind of address the regulators, there's a lot of good headwinds there, tailwinds to say, okay, it's time to approve the Bitcoin ETF.
Yeah, I mean, certainly. And I feel like the more engagement we have with regulators, so they sort of understand what the industry's approach is, the way the surveillance tools work, the types of things that get flagged, the types of reports that are run, like all of these types of things are incredibly influential, so that, in giving the regulator comfort. So
right.
I think, I think we're absolutely, we're well on our way, and it's just a matter of time. So
Michelle, do you want to go on record? I know it's a folly, but do you want to go on record as to when you might think? Is it going to be 2021? Are you willing to put your vote out there? Or no, it's too much of a fluid situation.
We have, we also have the changing.
Yes.
We just had an election, so I think that also affects the timing. So what we're going to see is some changes.
I'm hearing a hedge, Michelle. I'm hearing a hedge.
This is definitely a hedge. So we have a whole slew of nominees that will be coming that will also need Senate confirmation. So I think, there is going to be a little bit of a delay in terms of, we'll see. I can't give an exact date on Bitcoin ETFs, but
you're aspirational, but you put the hedge in.
Maybe they can just be approved before we have the changed administration. I don't know if that's going to happen. I don't think so. I don't think so.
All right, good. Well, we'll get your crystal ball out a little bit more later, in the conversation.
Perfect.
So let's talk about then, as we're talking about regulators and all of the, cryptocurrencies are unique in the fact that it's a means of exchange, or it's a, storage of wealth, or however you want to define it. And that's one of the challenges, is regulators are trying to define how that is. And so you have different regulators from all over the planet, right, that are chiming in on this asset class. Is it time for an SRO, right? Self-regulatory organization. Is Adam thinking about being an SRO? Kind of, let's talk kind of moving into that space is how does that process look? What should happen as it relates to a crypto SRO?
Yeah, so there has been a lot of talk about it. And look, I think Adam is best positioned to be a self-regulatory organization. As you know, SROs basically function as an appendage of government, and they typically receive a delegation of authority from the statutory regulators. And, just from my personal background, I think SRO status is something that you earn. It's not just sort of decreed, and that takes a while to achieve. And so when I look at this space, look, Adam doesn't require a formal designation by the government to establish operational guidelines.
Right.
And what we're doing is just that. And we're creating the ground rules. We're creating the best practices for, digital asset financial activities. And we're promoting the adherence to the code of conduct. And I think also just a bit about our structure, given that we're private nonprofit association, our mandate is to serve our members and also create those best practices. So I think we are really well positioned to become an SRO. I personally am a former regulator. I've spent my entire career doing regulatory law. I worked at an SRO. I worked in market reg at FINRA, and that was before going to Senate Banking and the SEC. And I plan to further earn and maintain credibility with all of the relevant regulators in this space. And as you note, there are many of them. I also, in part of this, as part of this mission, like I think some of the things that we touched on earlier are also incredibly relevant to this, to this assessment for SRO status. And I think, again, hearkening back to traditional equities markets, I think, there are a couple of non-exchange SROs that, for example, FINRA and NFA. But in the equity space, as you know, most of the SROs are exchange SROs. And that's something that we are, certainly exploring. And those exchange SROs, those tend to be the ones that are members of the Consolidated Tape Association. And that's how a lot of the infrastructure has been formed. And that's how the SIP was created. And that's how we got to an NBBO. And in 2005, we got Reg NMS. Love it or hate it.
We love it, by the way. We love it as a business.
Right,
yes.
I'm sure, right.
Yeah, exactly.
I think the linkage is pretty incredible,
Right.
But I think that serves as a lot of, I think, the basis and the framework for the way the regulators are viewing this space and what could ultimately come out and in the digital asset space. And these are things that any SRO is going to be working on, I think.
Well, pragmatically, how do you do, let's say in the United States, if we think about SROs today, they are, either governed by the SEC or CFTC and all the SROs that we just talked about. And if we try to pull analogs from traditional asset classes, you think about single stock futures, they never took off because they were jointly, covered by CFTC and SEC. Does, a digital asset SRO have to have both, masters and, or, heads of regulators, or is there ways to, pragmatically, who then is that government entity that you think you would be working with, to form the SRO?
So that's an excellent question. That's something that I've been looking at closely. And I will say, so, we have the single stock futures and all that, but look at the swaps regime, and we have Dodd-Frank, Title VII created an SEC security-based swap component, and also just the regular swaps, that are governed by the CFTC.
Right.
And there is a working framework with the regulators that works there. And, so as this space moves forward, I wonder if something like that, that like, I don't see a lot of legislation passing in the coming year, but
Right.
I do think that there are ways for regulators to work together to regulate a single asset class, So I think now also, when you look at how the SROs function, if you have these the SROs functioning pursuant to delegated authority, that assumes that the primary federal regulator of jurisdiction has the authority to delegate, right?
Right.
So now taking a step back,
Therein lies one of the issues.
therein
Right.
is
Exactly.
an issue. Exactly. Right. So now you have to say, okay, what is, for example, the SEC's jurisdiction in this space? What is the CFTC's jurisdiction? And if you were to combine that, could they, jointly be able to delegate authority, or would it require some sort of congressional action in order to create something? So I think these issues are all things that we're looking at, and
Job security is what you're saying, Michelle. Job security.
It's incredible. I mean, just the number of regulators is amazing. Job security, right?
Right.
So, no, but in all seriousness, like, I do think this is something that Congress may want to get involved with, or need to be involved in, and certainly from the SEC standpoint, because look, the jurisdiction of the SEC is securities, and there's obviously, just read the news, and not all, but not all are securities.
Right.
And I think the goal of many, and certainly, Bitcoin and Ethereum have been declared to not be securities very explicitly by the regulator. So I think there's a lot of opening here, and look at, I think Chairman, Tarbert at the CFTC has been very forward thinking in this space, and coming up with a good regulatory approach towards this asset class. So that's something, that the CFTC is, weighing heavily as well. So these are all issues that we're looking at.
You have a lot on your plate. So how let's kind of put our forward cap on. You're an SRO. How do you then go to the FCA, for instance, who just said no to cryptocurrency, and say, you know what, is there, how do you bridge that gap? Like, why do you think, and this is speculative, obviously, but you have a lot of industry. The FCA decision is weird to me. Like, it doesn't make sense. So can you talk a little bit about when an SRO or a regulator says, no, we're not going to do this, and what they're basing this on? I mean, you have these conversations with regulators all the time.
Yeah. So, and in all honesty, actually, I think what happens is sometimes the regulator will say no in one respect, but then yes to a whole host of other things. So interestingly, the FCA has been very forward thinking in a lot of things.
Right.
And certainly in the digital asset space as well. So, it's been a little while. I guess the last time I met with them was, I guess maybe now a year ago, but they're actively engaged, really interested in digital assets, certainly looking at this space. They've issued a ton of guidance on tokens, on exchange tokens and payments tokens, and they've done incredible work in this space. So I understand. I agree. I mean, I get what you're saying, but I also think they're doing a really good job. And I think they're also looking at ways to say yes. And FCA in particular, I think, is influential from just a worldwide, standpoint, given the fact that that's not a lax regulator, and they set a lot of regulatory standards. It's certainly someone that I engaged directly and very extensively with the FCA while I was at the SEC. And I think that's a very, very important voice in the regulatory community, and certainly within IOSCO. And I think as the FCA moves forward, I think they're definitely, I think they're going to be more favorable. I don't think they're just going to say no, but along the way, are we going to hit some bumps?
Right.
Yeah. I mean,
and that is the easier response is to say no, and then say, well, can we get some, industry input, industry feedback? We're going to say no now, and just, because obviously the goal is safety, and all regulators, the first principle is safety. We want to protect the investors, and I understand that. But to Crypto Mom's point is there's that middle ground where you also, if you disincentivize or you make it illicit or you make it challenging, then the infrastructure that's being built around that's not good. It's not successful for the industry.
No, that's exactly right. And I think the FCA in particular, and other regulators just around the world. I mean, look at what Switzerland is doing. I think they've been incredibly thoughtful and really wanting to attract fintech to their jurisdiction. And we're seeing a lot of people headquartering there now. Certainly, for example, look at Libra or DM.
Yeah,
yes,
exactly.
I stand corrected. Thank you. DM, because, and if you look at Mark Branson's comments, he has been very, very vocal about wanting to attract businesses and be friendly to this space, but also by having a real regulatory framework. He's not saying he's looking for, this is not a race to the bottom. This is high regulatory standards, and he wants to work with people. So I think Switzerland, Singapore has been incredible. Just the monetary authority has been just so forward thinking on fintech, on a lot of different things. So I think, there are jurisdictions all around the world that are all looking at this space. And, we will continue to see some no's. Abu Dhabi, look at ADGM, look at what they're doing. I mean, they're, but at the same time, I do think that we're seeing huge regulatory advancements.
Yeah, I think you're right. And, MAS, Monetary Authority of Singapore, they've done great things in that space. And, exactly what you're talking about. They put out a great paper as far as best practices in trade surveillance that we've referenced in the past that we think are real, very similar to the code of conduct, but have, the MAS behind it. We think that's really interesting. Let's move to specific rules, that are coming and talked about all the time, and make sure, we have a couple questions coming in here as well. So I'll throw those in there as well, but let's talk about the travel rule, Michelle, that gets a lot of press. What do you see as far as the ramifications of the travel rule? How do your members view the travel rule and its enforcement? And so, you have a really awesomely named regulator, quasi-regulator, the Financial Action Task Force, putting out the travel rule. What does the travel rule mean for the digital asset industry?
So I think, so FATF has done excellent work in putting, in setting forth this whole initiative. And I think, they've worked very hard. And I think the industry has worked even harder in trying to sort of implement this. And I think certainly Adam's members are doing tremendous work on the travel rule. Coinbase has led an entire initiative on this. I think there are a couple of things that we could see in the future. Certainly, we will need technology solutions for the travel rule. I personally think, Eventus could be well positioned to do something like that. I also think from a governance standpoint, I think an independent association could be positioned to serve as a governance mechanism for the travel rule. Adam, just as I mentioned, we're independent, we're not for profit. We have deep regulatory expertise. We have the code of conduct. We can certainly serve a useful role in travel rule governance and serving as that mechanism if that's something that the industry and the markets would like as well. look, everyone's talking about travel rule, and it's been around. It's going to be here to stay, but it also sort of, I think I would be remiss if I didn't mention that we're also about to see rulemaking coming out of the Treasury Department on the self-hosted wallet issue, on non-custodial wallets. I do want to look. We're all reading the headlines, and
Yeah.
I do want to sort of take a step back and note that, yeah, this is a big issue for the industry. It's also not a new issue for those of us who have been following it. We know that Secretary Mnuchin has been talking about this for a year. And in addition to that, the UK, and we were just talking about the FCA,
Right.
they have been working on this for over 2 years. And we have Adam, as you know, as an entity, is completely engaged in this issue, will continue to be engaged. We are hearing the rumors. We're talking with, we are also talking with regulators. We're talking with congressional staff about this rulemaking, and you know, we will definitely serve as a resource to the regulators and to lawmakers on this issue. I don't want to spread rumors, but I've certainly.
But I love the but there. Throw it out there.
I've heard. This is what people are talking about. So I'm happy to share what I've heard. I've heard that, you know, there could be rulemaking that's in sort of an interim final format, as opposed to being an actual proposal, which is one way of sort of doing rulemaking under the APA. So interim final would go effective pretty immediately, basically. That's not to say that there wouldn't be a public comment period. There's always there's usually a comment period that would be attached to it. So that doesn't mean that that Treasury and others would not be soliciting public feedback on any rule that gets implemented. I do think that an interim final would be a little bit different from the other rulemaking that we've seen in this space. I mean, certainly we just saw the Fed and FinCEN's proposal, the consultation that closed the day after Thanksgiving. They gave a 30-day comment period. That was something, you know, on travel rule thresholds. So, you know, so certainly this is kind of what we're hearing. I don't know if, you know, I don't know what Treasury will ultimately decide on this. I've also heard that there could be a safe harbor for those that are able to do thoughtful chain analyses. So we'll see what happens there. Look, I've been reading and writing rules my whole career, and
Right.
we're happy and we're ready and engaged to assist Treasury and the industry by providing thoughtful commentary on this. And on whatever is proposed, and in you know, in whatever form it is actually proposed in. So we are very actively engaged on this.
It's a lot to track.
Yeah, it's a lot.
As we've talked about, there's a lot to track here. Before we get kind of into your crystal ball, and you've talked a little bit about that, but as far as just kind of the, you know, incoming administration and things like that, and the way they potentially are viewing things, we've had a couple questions, and I want to talk, you know, in general about, you know, one of the things that we've seen is, you know, there's this constant, when are the institutional investors coming to cryptos? And obviously there has been hedge funds in that space, and there's some adoption, but it's still, you know, the asset class is $500 billion. Apple's market cap is $2.5 trillion, right? So there's so much activity, but there's always, I think it's always good to take a little bit of reality. Then it's still relatively a small asset class. But so that, do you feel like the evolution that we're talking about, you feel like these rules, you feel like the, you know, firms like Atom, organizations like Atom, what happens with that, right? Do we just see this kind of continuous adoption cycle that's kind of nice and gradual, or do you see these kind of big stair-step kind of adoption points? And so kind of talk a little bit about that adoption and where you think the industry is going there.
Yeah, so it's
a big question.
No,
it's a huge one.
You know, and I think the regulators know this, but so much of what happens is dependent on their actions. So certainly the more, and look, I think from an industry standpoint, we had the financial crisis happen, and we saw billions of dollars in fines being paid by market participants, and that, I think a lot of people still have the scars from that. So I think people are cognizant of what the whole world has lived through in the past. So I think the institutional market participants want to make sure that that we have robust regulatory frameworks, that the regulators are happy with, that they're comfortable with, and that market participants are abiding by those, because everyone really wants to do the right thing here. So, yeah. and I think the regulators really want to make sure that they're super careful in doing everything that they do. So I think the more comfort we get, the more we can continue to develop the markets, the infrastructure, it will increase the regulators' comfort. And then the more they get comfortable, I think that also helps with institutional adoption as well. So it's so weird. It's like chicken or the egg. But I think the solution is that we all just sort of have to continue working at this and working together. And I think ultimately we are all going to see an incredible success here. So,
do you think because this space is evolving so quickly, and we have a great question from Liam Glennon about trade surveillance evolving as things are facilitated on chain, the whole DeFi movement, right? Do you think, because there's such malleability with this asset class and such ways to do things, does that give the regulators pause, or does it give them concern? Like there's a hesitance because they don't know how the asset class is going to evolve, because it can evolve so quickly.
Yeah, and yes, it certainly can evolve quickly, but I think the regulators, I think the regulators are incredibly savvy, and I know a lot of people talk about educating and this and that, and honestly, I think the regulators love talking with industry. I think they're very well educated on these issues, and I think one of the things that we can continue to do is help, sharing our expertise, and if they have any questions, answering those questions. And then as long as they have a good foundation and understanding, then I think, which I believe for the most part, I think they actually do have a good understanding. I really do. Yeah. I think that's going to help. I think that helps. So even though things change and evolve, I don't think that's going to cause so much pause. I mean, look at how much the equities markets have changed, right. And the SEC handled that, I mean, in stride. I mean, it's a lot. It's a lot. And
yeah, for all the hand wringing and all the the conversations, it's still an extraordinarily efficient place, safe. It's the largest asset class in the world because of that process, right? It's iterative, it's messy, but it gets to the right spot at the end. And we're going through this in real time right now with crypto.
We used to not have electronic exchanges. I mean,
right. Like not that long ago, by the way.
Not that long ago. Right. Not that long ago. So right. I have full confidence in our regulators. I really do.
Well, then you're awesome at this segue thing. So we have 5 minutes left before we want to end here. So let's, put your crystal ball on. Are the regulators coming in, or the potential regulators coming in to this new administration, at least whatever information that more open, more interested, not interested? I know it seems like Biden is pulling some people, from the Obama administration into it. Gary Gensler is a name that's being batted around, a name that a lot of people know in the future space. What does this new administration, as kind of a macro view, think about the digital asset space, as far as you can glean right now?
Yeah, so one thing I wanted to say is something that just happened last week, actually, is Chair Clayton at the SEC just made FinHub a standalone office at the SEC, and now Val Stepanek reports directly into him. So that's a huge structural change within the agency that just sort of highlights the importance of these issues for the agency. So I think that's an incredible initiative. With the new incoming administration, yes, we are seeing Gary Gensler heading up Biden's transition teams. And look, I think there's going to be a huge focus on regulation in this space. We have I think we will ultimately have a divided Congress. Obviously, we still have the Georgia runoffs, so we'll see what happens there. But I think what we are going to see is a Republican Senate and a Democratic House. I don't see a ton of legislation being able to advance in this space with that kind of setup. I think where Gensler has really shined in the past is on the regulatory side. He is, I think, one of, I would almost say he's like single-handedly responsible for putting the CFTC on the map. I mean, look at what he did in creating.
Dodd-Frank's pretty big.
Dodd-Frank's pretty big. Title VII's pretty huge. And look at the swaps regulatory regime that was implemented at the CFTC, after the fact. And I think, Gary Gensler is brilliant. He's been spending all of this time at MIT working on this space. He has a regulatory track record, and I think we're going to see a lot of regulation sort of advance in this space. So we'll see.
So a lot of regulation on the kind of putting a nice box around it, or trying to uplift it, making it more successful, like directionally.
Yeah, so
type of regulations.
So he has made comments about what is a security, what isn't a security. So we'll see, I think, classification of different types of tokens. I think we'll see regulation of the markets, certainly, because that's something, that's like the swap execution facilities, all of that was born out of Dodd-Frank. I think that those regulated platforms certainly could be something that he could look at. I don't know. We also don't know what role he's going to play. Certainly, we're seeing his name floated for Deputy Treasury Secretary, but I've also, seen NEC Director. He could be SEC Chairman. We don't know. Okay, so there are a lot of different roles that he could play. I think we're also going to see a resurgent, and I kind of alluded to this earlier, CFPB. I think a Consumer Financial Protection Bureau certainly could scrutinize digital asset firms. So as
another regulator to add to the mix.
Another one also created by Dodd-Frank. So there's another regulator that could actually be looking at this space, and I think that we could reasonably see increased activity from them. Certainly, we've all seen Janet Yellen's statements in this space, just the comments about not being a fan of Bitcoin. But I also just want to highlight that there was a 2017 speech that Janet Yellen gave, and she talked about how blockchain is really important and it's new technology, and it could make a big difference in the way transactions are cleared and settled in a global economy. And she cited societal benefits. And I think, I think sometimes there's a lot of negative information in the news, but she's made a lot of really positive comments as well. So I just wanted to sort of highlight that. And we're going to see a lot of continuity at the agencies. Certainly our beloved crypto mom, Commissioner Hester Peirce, has been re-upped and reconfirmed for a second term. So she'll be in until June of 2025. So I'm very excited about that. And, we'll see continuity in almost all of the commissioners at the heads of the SEC and the CFTC, almost all. So I think that's also really great news.
Well, I think we've come to the end here. There's just a few things going on in this space to be able to track. I think, hopefully we've talked and give people a nice overview of the space and how Adam is involved. So, Michelle, if they want to reach out to Adam, they want to learn more, they want to reach out to you, how do they get in contact with him?
So Well, first of all, feel free, please come to our website, look at our code of conduct. We're really proud of it. In case you haven't seen it yet, please check that out. My email, if you would like to email me, is michelle@theatom.io. And I am Michelle Bond 111 on Twitter. So feel free to follow me on Twitter, and Adam, we're Digital Asset Markets on Twitter as well. So feel free to reach out in any way you see fit, but we'd love to talk with you.
Wonderful. Thank you so much. And if you want to hear about Eventus, eventussystems.com, or Travis at eventussystems.com. And really appreciate your time, Michelle. Happy holidays to you. Thanks for everything. We'll talk soon.
Thank you. Thank you so much for having me, Travis. This was a really fun water cooler conversation.
I enjoyed it as well. Very nice. Take care.
Bye. Take care. Bye, Travis.